Mr. Beast gives away over $100 million a year. What does the IRS say about that? When you hand out that much money, you don't just go viral, you do have tax consequences. And if you don't handle it right, you could absolutely trigger audits. Now, he's a very public figure and all eyes are on him. And here's what nobody is talking about. Some of his biggest winners could be stuck with massive tax bills. Interestingly enough, so could he. So let me show you how the tax law actually works when you're the one giving or receiving the prize. So when you give away a huge prize, okay, like cash, cars, houses, etc., what is that? Well, it depends. If you're giving it away because you like somebody, you're appreciating them, something like that, it is not deductible. If it were given away to a charity, it would be deductible. But if you give something up for love and affection, it's basically the way to put it, to an individual or a organization that's not a public charity, it is not deductible. So I haven't looked at MrBeast's tax returns. I don't know how he handles this, but there's really only two possible ways to do it. The one is that he's not taking any deduction. He's giving away $100 million and he's not taking any deduction. I would be shocked if that's the way he's doing it. I would be really surprised. The other way is that he could do it the same way as if you got a prize on a game show. Let's say you were on, for example, something like The Price is Right, okay? And you go and you win a new car or a washer dryer or a new living room furniture or a vacation. What you're gonna get in the mail is a document called a 1099, and it's gonna be for the full fair market value of what you received. One of the biggest problems with owning gold is storing that gold. You pay month after month just to keep it locked away and your stack never grows. But with monetary metals, the model is flipped. Instead of you paying fees, they actually pay you in gold to store your gold with them. That means your ounces go up every month. Now, how does that work? They lease your gold to qualified vetted businesses like jewelers, refiners, mints that need it for inventory to operate. In return, you earn a yield, typically 2 to 4% a year, paid directly in gold. Now, how is that possible? Well, everybody knows that if you're a retailer, wholesaler, etc., you have to maintain a certain amount of inventory on hand at all times. And rather than buying that inventory, they're leasing the inventory from you. So they have the gold there in their inventory for 12 months. And after 12 months, you can get it back or you can renew your lease. That's how it works. So for many investors, this simple shift, turning the cost of storage into a yield on their storage, is the difference between watching wealth erode and watching it compound. Monetary Metals has already completed over 75 deals across 5 continents with thousands of ounces paid out to clients, and so far, 0 losses. So if you own gold, ask yourself, why let it drain you when it could be working for you? Go to monetary-metals.com/CPA today and see how your ounces could start growing again. That's monetary-metals.com/CPA and let them know that I sent you. Now, if you're getting cash, that's no big deal because you're going to pay tax on the cash. But let's say you get a prize like a car, and let's say the car's value, suggested retail price, is $40,000. You go to sell it and you get $35,000. You're going to pay tax on $40,000 and you're going to get a capital loss of $5,000 when you sell it because you held it for investment. If you didn't ever drive it, if you drove it for personal purposes, you'll get no deduction for that $5,000 loss. Here's general rule. If you ever have the option of a prize or cash, take the cash. Always, 100%. Take the cash because you can always go buy it. If you take the cash, you can always go buy it with the money you have left over after paying taxes. But assuming that MrBeast wants a deduction, he's saying, hey, this is a business expense. This is not because I like you. It's a business expense. It's what makes me money, which is frankly the way I would advise him if I were his tax advisor. Now he's going to have to send you a 1099. You're going to have to report that as ordinary income on your tax return. And it will be subject to not only income taxes, but could also be subject to self-employment taxes. Did you do something to earn it? Did you enter a contest? Did you do something else to earn that money? So you have to be pretty careful about what happens when money transfers hand in a so-called gift. Again, if it's truly a gift, you don't get 1099, it's truly a gift. He's not getting the deduction for it. And if it is truly a gift, you do not have to report it as income. So for example, you get a Christmas gift from your grandparents. That is not taxable to you. Now, it's not deductible to your grandparents, but it's not taxable to you because gifts are not taxable. What if you could lower your tax bill and stack Bitcoin at the same time? Well, by mining Bitcoin with Blockware, you can. New tax guidelines from the Big Beautiful Bill allow American miners to write off 100% of the cost of their mining hardware in a single year. That's right, 100% write-off. Now, if you have $100,000 in W-2 or business income, you could purchase $100,000 of miners and potentially offset it entirely. And you have to dot your I's and cross your T's. So make sure when you are doing this that you plan with your CPA tax strategist. Blockware's mining as a service enables you to start mining Bitcoin right now without lifting a finger. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. You get to stack Bitcoin at a discount every single day while also saving big come tax season. We always want to make money first, and then we want to make sure we're saving taxes on that money that we make. None of this is tax advice. So go speak to the team at Blockware to learn more by going to mining.blockwaresolutions.com/Tom and meet with your tax advisor. Except if he gives away, let's say MrBeast gives away a big prize and he is not treating it as business expense, then what happens then? Well, he could have a gift tax on that gift. You still don't have to pick it up in income. So if it's a true gift, he doesn't get a deduction, you don't pick it up in income, but the donor, the person giving the gift, may have a gift tax. That is a different tax than the income tax. It's actually at a considerably higher rate than most income tax. So the issue here is, and we're looking for a deduction, we want to make sure it's a business deduction. Now in game shows, they make it easy because you're required, in order to get the prize, you're required to give them your name, social security number, a form, what's called a Form W-9, so that you get that 1099 in the mail because they want to make sure they're deducting the cost, because otherwise they'd go out of business. They've got to deduct the cost of the prizes. They need to make sure that you're getting a 1099. Now, does MrBeast have to do that? No, I think he could say, hey, I'm doing this out of the goodness of my heart, and he's not getting a deduction for it. To me, that would be a horrible tax mistake on his part. He should probably fire his tax advisors. But remember, there's gift tax, and the gift tax is not on the recipient. The gift tax is on the person who makes the gift. The recipient only has tax if it's treated as income. Now remember, all income is taxable unless there's a specific exception. Gifts that you receive out of the kindness of somebody's heart are not taxable, but you have to make sure that that's what it is. I think if he's smart, he's making sure that it's deductible to him and it's taxable to you. So is MrBeast running a big business expense, or is he just handing out income that he's being taxed on and you don't have to be taxed on it? It's a really interesting question. I've never gotten a gift from MrBeast, so I don't actually know the answer and how they're treating it. But it's really interesting. If you ever get a gift from MrBeast, I would expect a 1099. I would ask the question, because if you get a big, some big award, you need to make sure that you report that as taxable income if it is taxable income, but don't report as taxable income if it's truly a gift from the heart. See, big giveaways make big headlines, but behind the scenes, the tax bill can be just as massive, and someone always has to pay it. Someone always has to pay the tax bill. So these giveaways typically are treated as income to the winner. 1099, it's reported to the IRS. They're going to come after you. Now, if it's a little small amount of money, a couple $100, doesn't have to be reported. But anything over $600 or more has to be reported to the IRS if they are taking it as a business expense, okay, which I suspect they are. And again, the winner owes income taxes, and it's just for the year. It's just like any other income, just like wages. If you can't pay the tax, then you have to enter in some kind of agreement with the IRS. You're going to pay interest and penalties. So it's pretty severe. What happens to the donors, the creators, when they forget to get the information to send 1099s, they don't get to deduct it. This is a big deal to them. So that means that wherever they got their income, whether it was from sponsors, whatever, that's taxable to them, but then the gift is not deductible to them. So they want to be very careful. Remember, giving isn't always generous. Sometimes it's business motivated, like a prize in a game show. Because in the eyes of the IRS, all income is taxable unless it's truly a gift because of the kindness of somebody and not from a business standpoint. Income means tax to the recipient. If it's a gift, no tax to the recipient. But if it's income, it's taxed to you, whether you like it or not, whether you think it should be or not. You go, wait a minute, he did this out of the kindness of his heart. Too bad. If you think this all sounds complicated, you're absolutely right. But high income earners, they know how to use the tax rules to their advantage. They structure, document, and protect what they give and what they keep. If you want to keep more cash in the next 30 days without changing your business or working more, grab my free tax guide. It shows you exactly what to track, how to structure things, and what to stop doing today. But it's only available for a limited time. After that, it's gone. Click the link below and download it for free.